Hello, welcome back to Bazaar Morning Call. This morning, the SGX Nifty is indicating that the start will be in the red. We've had some good days for our market, so perhaps a little bit of profit taking won't do any harm. Our research team is here to give you the list of top 10 stocks as we get into trade today. So let's welcome all of them. Hi guys, good morning. Anuj, let me start with you. Given that there could be some red on the screen in the initial part of trade, how do you approach it and what are the stocks to look at?
Yeah, so as I said, let's wait for the first hour high and low, and then we will take a call accordingly, Sonia. In terms of stocks, I think I'm taking a bit of a sector call here. Life insurance, I think, is a sector which is really making a big comeback, and for good reason. Almost everyone's topping up on their insurance. Now, two stocks, SBI Life and HDFC Life. In both cases, there's been a supply overhang because promoters have been selling due to regulatory requirements. But the stocks have been strong despite absorbing that supply. So I think I'll keep an eye on both these names. These are, of course, not from the day trade point of view, but just to give you a perspective on what's happening in the market and how there's a sector which is making a bit of a niche. So that's why I'll watch both these names now.
People can top up provided they have a job and no pay cut, Anuj. I think these sectors are running up because there is a lot of liquidity and people are trying to find stories, some justification to where you will put the money. I saw a brave justification for putting money in NBFCs over the weekend. I mean, it's fundamentally very difficult to justify, but if there is liquidity and these are beaten down valuations, you can always find a reason. Well, Sonia, I think the stock of the morning is going to be RIL as the rights issue gets listed and also as the market discounts two more investors into the Geo platforms.
And it's interesting, the profile of investors that have come in over the weekend. As you rightly said, two more deals. Now, L Catterton has invested about 1,894 crores. And this is important because L Catterton has over $20 billion of equity capital dedicated to growing the middle market consumer business. So they are basically a consumer-focused private equity fund, which takes the spotlight from the telecom business to the consumer-focused retail business of Reliance as well. So that will be in focus today. TPG will invest about 4,546 crores as well. Put together now, Geo Platforms has announced investments worth 1.04 lakh crores in just 8 weeks. They've sold 22.38% stake. They are well on track to become debt-free before their targeted deadline of March 2021. The partly paid-up rights shares will also list today. The analysts are expecting the listing to take place at around 625 to 675 rupees. And as we know, the subscription was very strong at 1.6 times. A standard disclaimer though, Reliance Industries is the owner of the channel that you're watching.
Okay, Sonia, thanks a lot for that. Yes, we'll keep an eye on Reliance. That's now the highest weighted stock in the Nifty. But Nigel, what about Hindalco?
Well, Anuj, Hindalco's domestic operations were reported in Friday's trading session just at the time we closed up. In fact, both the segments, that's the aluminium business, that beat our estimates of around 960 crores by a good margin. So that was a positive. The second factor was the copper business. The EBITDA came in at around 400 crores, although it included a one-off that included hedging gains of around 100 crores. Even stripped of that, the number comes in at around 300 crores, which is much higher than the 250 crores odd that we were working with. So both the segments beat estimates. The management commentary was very, very positive on volumes, on cost cutting and the way ahead as well. So keeping all these factors in mind, brokerages, well, they more or less have a buy call on the stock. The target prices come up for you on the screen. They believe even after the rally of around 15%, 50% of the stock in the last couple of months, still valuation wise it's attractive and they're impressed by the cost cutting measure. So difficult to say, but the stock should open up in the green on the back of these numbers and management commentary.
Oh yeah, point taken. And lately, probably because of the dollar fall, metals have been having a good time. So there is a bit of a tailwind as well for metal-oriented stocks. We'll come back to you for Grasim, Nigel. But before that, one of the numbers that didn't flatter at all was Eicher Motors, Sonia.
It was, and Lata, I think the bigger problem here is the commercial vehicle business has posted a loss. So, however, the Royal Enfield business is doing, it's not doing well at the moment, but the commercial vehicle business losses just overtake the problems here. So, just to give you the numbers, below estimates both on Royal Enfield and commercial vehicles, margins down 780 basis points year on year, overall coming in at 19.6%. Commercial vehicle business posted a loss of 26 crores, I think for the first time ever. The management management commentary was positive. They are saying that, demand has picked up, especially for their new BS6 bikes in some of the pockets, but because of the losses in the commercial vehicle business, I expect the stock to be in the red. For Volvo Eicher, even revenues fell 35%, EBITDA was down 86%. So I'm going with red because even the stock has been underperforming the rest of the street in this calendar year. Back to you.
Okay, Sonia, thanks a lot for that. Well, let's see the market's reaction actually on that one today. Nigel, what about Grasim? How are the numbers looking?
Well, Anuj, Grasim has seen a rally of nearly around 50% from the lows that we saw a couple of months back. Now, in terms of the numbers, the VSF business was as weak as as expected. In fact, it was a little bit better than what Kotak was working with in terms of EBITDA number. But the chemicals business, that came in as a disappointment, came in at around 105 crores odd. The street was working with a number closer towards 150 crores odd. The factors at play, they lost production, pricing as well in both the segments. That's the chemicals, and the VSF business was weak. And the management commentary wasn't very, very encouraging. Still, they're not functioning at very, very high capacity utilization levels. They're expecting a recovery only in the second half of the year. So after the big rally that we've seen, maybe we could see some kind of profit booking. Edelweiss came out with a note. They have slashed their estimates by nearly around 50% for the coming year. That's FY21. And also they've cut their target price from around 1,000 rupees to around 750 rupees. For Grasim, the bigger trigger is Ultratech Cement. But going by these numbers, the stock could be a little bit nervous. You also have that overhang in terms of whether any money will be allocated to other group companies. So that's another overhang on the stock.
Okay, not looking good, right? Thanks a lot for that, Nigel. Anisha, BHEL, I know you're going to cry, horror story, but I didn't expect any different.
Well, yes, Lata, the street was expecting a weak sale, but it's much weaker than expectation, and it is worth crying out because the company reported a quarterly loss of 1,500 odd crores. It has been eating into its cash balances because a couple of years ago the cash balance was 12,000 crores. Now it's down to 1,500 crores. A cash operating level of a negative of 2,800 crores in a quarter. Gross margins have been lowest in 12 years. So I am expecting a red tick on the stock today.
Okay, thanks a lot, Anisha, for putting that in front of us. Let's go across to Abhishek now. He's watching out for a couple of more stocks, Punjab National Bank Housing, PNB Housing, and PTC India on his radar as well. Abhishek, over to you.
Well, Sonia, PNB Housing is the second HFC to report a quarterly loss after DHFL. So the moratorium book was at 31% under phase 2. This compared to 56% under phase 1. Asset quality deteriorated with gross NPA rising by 1% to 2.75%. They have seen lowest quarterly disbursements at 2,826 crores, and therefore, the AUM also declined YOY for the first time ever, which meant that the net interest margin is the lowest ever at 2.61%. Coming on to PTC India Financial, the total income remained flat YOY and quarter on quarter. Provisions increased massively to about 74 crores. So PAT was at 7 crore only, which was down about 81% YOY and 84% sequentially. Back to you.
Okay, Abhishek, thanks a lot for that. Well, let's go back to Anisha then for some more results. Anisha.
Oh, well, yes, Anuj, I have a few more weak results coming in. First up on Castrol, the revenue is down 30%, the margins have contracted, and as a result, the profit is down 32%, so perhaps a red tick there. Weak numbers coming in for Vinity Organics as well, but given the macroeconomic condition, maybe the street might take it well. The revenue is down 19%, the margins have remained flat, and the profit is down about 10%. For IOL Chemicals, though the revenue has increased by 5%, the EBITDA has declined, and consequently the profit is also lower by 11%, so a red tick there. And lastly, on Suprajit Engineering, the results are not too bad because the revenue is up around 2%, EBITDA has jumped up by 6%, and the profit before exceptionals is also largely flat, so that can be a tad bit of mixed reaction to the results.
Okay, got that. Thank you very much, Anisha. Nigel, you also have a bunch of numbers, tin plate, etc. on your plate.
Well, that's right, Lata. It's going to be brave, but there is some positive in these four results that we are going to be looking at. Let's start off with Dalmia Cement. Well, the numbers are expected to be a little bit weak, and they were quite big. In fact, the sales volumes were a little bit better than what we were working with. The street was working with a degrowth of around 10%. The EBITDA number as well did see a contraction, but that's more or less on expected lines. Now, valuations are supportive. It's a large cement company trading at around $65 per ton, so that'll be a positive. Cement, we know, has been in favor, and also half of their buyback has been used, so the other half could give some kind of support. So that stock should be more or less stable. Tata Communications, the consolidated numbers out there. The top line, there was a growth of only around 4% on a sequential basis. But what looked impressive was the margin expansion of around 180 basis points odd. So that's a positive. Tin plate, well, it's more conversion kind of business. So on the top line, there was a degrowth of around 11%. That's mostly on the back of the COVID-19 outbreak. But the profitability did jump up by close to around 30%. It appears there was some inventory gain out here as well. Margins coming in double digit. That's a positive. And finally, Mastech, on a sequential basis, the big growth in terms of revenue was up more than 35%. And even the margins did improve to around 17%. That compares with a little bit lower than 14%. So all these four numbers, there was some good in all four of them. Back to you.
Okay, that's very well put. Thanks, Nigel, for that. Let's go across to Mangalam now to end this segment with a couple of more stocks that he has on his radar. Mangalam.
A handful of stocks, Sonia. We start with GMR Infra, where GVIAL, which is their Visakhapatnam International Airport arm, has signed a concession agreement for development and operations of Bhogapuram Airport. So that's a positive. Apart from that, we have a handful of other stocks as well. Oil India, that's the one that should come up for you. Because of the fire, now the company's put a number to the fire. Close to around 500 metric tons of oil have been lost in terms of production. So the street will, get themselves around this number. Fine. And then we have Capacity Infra as well. Capacity Infra, where, there has been a downgrade in terms of outlook. India Ratings has, downgraded their outlook from stable to negative, while the rating itself has been reaffirmed. And then we have DLF. CNBC TV18 spoke to DLF over the weekend, and they said that most of Delhi malls are open right now, and they expect 30% footfalls over the next few weeks. So this is something we'll keep on our radar as well.
All right, Mangalam, thanks a lot for all those snippets that we should keep on our radar. But I think the biggest, the biggest news that we have to keep on our radar is how the RIL rights issue lists, as well, how the market looks at this unending stream of investors who are queuing up for Jio platforms. That will definitely be a point to watch, to analyze Reliance and, of course, the other results as well. We will be joined by Prakash Devan in a minute after this break.